Hey guys, what is going on? Welcome to the video. So in this video, I'm be going over 3 stocks I'm looking to trade and buy this upcoming week. I went over last week's picks in the previous video I posted yesterday. I'll link that right up above. If you are interested, make sure to check that one out. But real quick, once again, these trades that I talked about on here is what I'm planning to do and is what I'm doing right now. It's not me telling you to buy or sell anything. It's just ideas what I'm personally doing. I'm not a financial advisor. Alright, so first off, getting to the first stock I'm looking to trade this upcoming week. This is SNPR, and this can be the merger with Volta Charging, an EV charging company. Now, my thesis on this one is it is very undervalued compared to all of its EV charging competitors. It is a SPAC right now, sitting right at the net asset value price at $10 per share, which means pre-merger this will not drop below $10 because all of these shares can be redeemed for $10 per share once that merger does happen. So short term, there is essentially no risk with this position. So real quick, taking a look at the chart, this stock took off earlier in the year when the SPAC market was hot, hitting a high of over $19 per share. Since then, it has trended down slowly, as of right now sitting right at $10 per share. So the business model of Volta Charging that they have over the competitors is they are in the advertising space as well. So with each one of these chargers, they have a digital screen along with it that other companies can also advertise on by paying Volta, which adds another revenue stream along with their charging revenue. So this gives an advantage over other competitors. First off, because these screens look great. In any location, if you see these, they are very aesthetically pleasing compared to something like Blink Charging, which is not very pleasing to the eye. So in my opinion, high quality businesses are going to prefer Volta Charging over other chargers in that area. Now, the big advantage that Volta gets with providing this advertising revenue along with it is it increases their gross margins to a 10% greater margin than the majority of other EV chargers. So they're going to be making more money per charger than any other charging company is. So in the long term and by 2025, their gross margins will be over 50%, which is a hugely profitable business model. Now we're going to be looking at some comparisons really quickly, but a quick view of what Volta is projecting for the revenue. For this year, they're expecting $47 million worth of revenue, increasing 200% next year, 99% the year after, 75% in 2024, and 68% in 2025. And in 2025, they're projecting their revenue to be $826 million. They're going to be EBITDA profitable by 2023, and by 2025, that is when they'll have full profitability. Volta has an enterprise value of $1.4 billion. If they were to merge and their stock price does stay at $10 per share, the valuation would be right at about $2.04 billion. So the reason that I think this is an absolute steal of a deal right now is because of the comparisons and revenue and gross margins to all these other EV charging companies that are already public. So taking a look at a couple examples. First off, ChargePoint. Right now, they're the most established charging company, and they will be in the long term because they are the largest. So by 2025, they are going to be expecting $1.4 billion worth of revenue, with gross margins right at about 40%. EVgo, another one of these recently public charging companies, in 2021 they're expecting $20 million worth of revenue, which is actually lower than Volta right now. And by 2025 they are expecting $596 million worth of revenue, which is also lower than Volta's expectations, while also having those lower gross margins. And we'll take a look at that market cap in just a second. And then Blink Charging as well. In my opinion, this might just be the most overvalued EV charging company. It has a market cap at $1.59 billion. While we're at now for the trailing 12 months, sitting with about $7.16 million worth of revenue, which is way behind these other competitors. So a quick little list that I put together comparing each of these companies' market caps compared to their 2021 revenue and their 2025 revenue. There is one that just does not add up, and that is Volta Charging. So at $10 per share, like I said, Volta will have a $2.045 billion market cap where it's sitting right now. 2021 projected revenue at $47 million, 2025 projected at $826 million. And make sure to remember with this one, they also do have that 10% higher gross margins than the majority of other EV chargers. Now taking a look at ChargePoint. The market cap right now is sitting at $8.54 billion. Their 2021 projected revenue is $198 million. Their 2025 projected $1.427 billion. EVgo, market cap $3.16 billion. 2021 projected revenue $20 million. 2025 projected revenue at $596 million. And then finally, Blink Charging, market cap at $1.49 billion. 2021 projected revenue is going to be right about the $9 million range, and the 2025 projected revenue is not available at this time. So taking a look at this list, you can just tell that one of these companies is way undervalued compared to its competitors. That is going to be Volta Charging, ticker symbol SNPR, and they also do have those higher margins, so they're going to be more profitable than these other companies. So when it comes down to it, the market cap is just very discounted at this price, if you compare it to the competitors, I think this is very undervalued looking at these metrics. And I think that this will get realized very soon, and I think SNPR does make its move very, very soon. Now, the catalyst that we are waiting on with Volta is going to be the merger date. So we have not gotten this merger vote date yet. We should be getting this any week now. They did end up agreeing to this SPAC deal back in February, so any day now we should be getting an update on when this merger vote date will be. In my opinion, we'll get this date in August by the latest. Reason because any of these other companies that did agree to a SPAC deal in February, the majority of these have already gone public, and if not, they already do have their merger vote date out. Now, talking about the risks real quick, short term, of course, there's going to be no risk at the current price because it's not going to drop below that $10 level pre-merger. But the risk is with this company is if the projections are too high, if they're greatly overvaluing themselves for the projections, there's always a possibility with SPACs. We've seen that with other SPACs. So that is a possibility that they are projecting their revenues to be too high. So there will be risks with any of these beginning stage companies, a lot of these being SPACs. But if you just take the market cap, if you take the projections, but out of all of these, Volta Charging is greatly undervalued. And I do think Wall Street will realize that soon. And when that merger vote date does come out, I do think that is when the stock will get realized. And that's when we see a move. My personal price target on this one, I do think we could see anywhere from the $11 to the $13 range or so. Short term, when that merger vote date does end up getting announced. For risk management, let's say we get to the merger date. Let's say the stock price is still sitting at $10. That will give you the risk of once that ticker change and merger does go through, it could drop below that $10 level. So that'd be the place to cut your loss under that $10 net asset value if you are looking to be safe and reduce risk for this position. Alright, so getting in the next stock that I'm looking to play this upcoming week. This is a stock that I've been buying heavy all throughout the past week, all in these dips. And this is Alibaba, ticker symbol BABA. So of course this does have the risk of being a Chinese company, and that is what we're seeing happening right now. All the panic from the Chinese Communist Party, what happened with Didi, ticker symbol DIDI. Everybody's scared that the same thing is going to happen with Alibaba. But in my opinion, this is all an overreaction. This more than prices in the potential risks with this stock. The technical setup looks great right now, which we'll look at in just a second. And the valuation just undeniable. It's trading at such cheap fundamentals. I personally think this will get realized, and I think we see a full bounce back in BABA. Alright, so first off, taking a look at the technical setup, we can see that for the past 6 years, this has been following this trendline support level. As of right now, it is testing and bouncing off the support level. And also that pink line, which is the 200-week moving average, that is essentially the holy grail for long-term entries, getting in at that 200-week moving average for a long-term uptrending stock, which is Alibaba. This is the weekly candle chart that we're looking at as well. The longer that patterns do form, the more likely it is to play out. And this is setting up in a falling wedge pattern as well. The falling wedge is a downtrending pattern, but it does end up resulting in a reversal and a breakout when it does break out of this downtrend, which in my opinion is what's going to happen with BABA. And we will see that full breakout sooner rather than later, in my personal opinion. So just taking a look at the setup right now, the setup really does not get much better than this for an entry for a reversal. 200-week moving average, falling wedge setup, long-term trendline support. This is setting up perfectly, and it also does have gaps to fill on the way back up. As we can see here, there's about 5 large gap fills on the chart that will likely be filled in the future, in my opinion. The fundamental value just does not get much better than this as well, sitting in the low 20s for a forward PE. Still in heavy growth mode, over 60% in the past quarter. They're expected to be growing about 60% year over year, and then about 30% once things even out and slow down. And if you take a look at the 2018 stock price, as of right now, Alibaba is sitting at the same value that it was in 2018. In this quarter one of 2018, Alibaba had 81 billion in the Chinese currency revenue. And in quarter one of 2021, this year, it had about a 187 billion worth of revenue. So they've increased the revenue by over 2x in that time frame, and the stock price is still the same, which is mind-blowing. The bottom line, in my opinion, the stock price will reflect the fundamentals sooner or later. The Chinese government, they are super strict. There are a ton of risks for sure, but in my opinion, they're not going to be destroying one of their largest companies. The Chinese want to stay competitive as being the dominant country in the world. In my opinion, regulating Alibaba so heavily will not help them achieve that. So I do believe that this risk that people are seeing right now is overblown in the long term. So sure, it's risky with the Chinese government. There's going to be risks for the majority of stocks out there. The valuation is just too good to pass up right now, in my personal opinion. Charlie Munger agrees. The man who works with Warren Buffett side by side disclosed a $37 million position in Alibaba, and he bought this in the $220 to $230 range. As of right now, Alibaba is sitting below $210 per share. If anybody knows value, it's definitely Warren Buffett and Charlie Munger. So are there risks with this company? For sure. What I'm personally doing, I'm loading up on these prices. I think this is an absolute steal. And over the past week or so, I've personally built this into one of my largest swing positions in my portfolio. Alright, so we're getting into the final stock that I'm looking to trade this upcoming week. This is Walgreens Boots Alliance, ticker symbol WBA. So this is a stock that's been heavily beat down recently after their earnings report. We'll take a look at that in a second. It's a very cheap valuation. Current stock price is sitting about $47 per share. So first off, taking a look at the technical setup, the stock does have strong support at $46 per share. It is also bouncing off the 200-day moving average. Also taking a look at the short-term chart, we can see that ever since their earnings, they dropped from $54 per share, now down to $47, and has been on a straight downtrend pretty much ever since that earnings date. Recently broke out of that downtrend and falling wedge, and looks great for more upside right here in my personal opinion. I'm personally targeting a move to that $50 level, which in my opinion will act as that first key resistance level. The chart is also setting up in a long-term cup and handle formation, which if this pattern does play out, has a ton of upside from here to go. The last long-term cup and handle that I did call out was Molson Coors, ticker symbol TAP. And this setup ended up playing out from the low 40s all the way hitting that price target of $60 per share. So I do think the potential is there for Walgreens to have the same type of move as we saw with TAP. So with their recent earnings, they did have a great results for the previous quarter that they were reporting on, but their forward guidance did scare some people with the fact that the vaccination boost will fade and it was more of a short-term thing, which is what we were expecting anyways. Nobody expected that these vaccines would be lasting for the rate that they were going at. So their earnings per share were $1.51 compared to the $1.17 expected, and also the revenue did beat as well at $34.03 billion compared to that $33.76 billion expected. Now, the thing that scared a lot of people was the fact that the COVID vaccines did peak for this quarter. So they're expecting 7 million COVID vaccines in the fourth quarter, down from 17 million of what they expect to happen in the third quarter. So the vaccine rates are peaking, but that should have been expected anyways. Nobody expected that the vaccines would stay at that rate for long. The CEO also did say that he has seen momentum as people return to more typical shopping patterns and prescription refills, so it's not all bad with the vaccines going away. Even though it does end up reducing store traffic, it is not the end of the world, and this was expected anyways. So the valuation at this price is an absolute steal, sitting at a forward PE at 9.09, price to sales under 0.3. Just in my opinion, after these earnings results, this huge sell-off is a big overreaction, and I think this gets corrected very quickly. I think we see a quick bounce back to that $50 range. Because their earnings results were great, the vaccines are slowing down a little bit quicker than people expected. So what? It was going to happen anyways. It's still trading at an absolute steal of valuation, right in the low 9s of a forward PE. Crazy cheap valuation for what we see with the majority of stocks in this current market condition. So I personally think that we see Walgreens stock have a quick bounce back. With the stop loss, I'd have a stop loss under that $46 support level, targeting a bounce back up to that $50 range after this falling wedge breakout and this big earnings overreaction. So that's what I got for this video. A quick recap. First off, SNPR. This can be the merger with Volta Charging. Next up, Alibaba, ticker symbol BABA. Personally, don't have a stop loss on this one. If you do want to play it safe, a good place for a stop loss if it does not end up holding that $200 support level. But personally, I'm just going to be letting this one ride out. I think we have a big bounce back in that one. And my target is $240 by the end of the year. And in the long term, I think it easily gets back over $300 per share. Finally, we talked about Walgreens Boots Alliance, ticker symbol WBA, with that stop loss below $46, target up to that $50 range. Alright, so I hope you guys enjoyed the video. I hope this provided some value to you. If you are interested in joining the Discord chat, getting my buy and sell alerts, getting nightly watch lists, and having full access to my portfolio, that is the first link down in the description. Make sure to like, subscribe. It does help out a ton, and I would greatly appreciate that. Thanks so much for watching, guys. Make sure to trade smart this upcoming week, and let's get rich.